Good afternoon and welcome to the program. I am Bosin Namofaye. This is Business Incorporated. Let's get the program started. Glencore PLC, the Swiss commodities trader, set to cut its net debt to as low as $18 billion by the end of 2016 as commodity prices continue to plunge. Meanwhile, South Africa's President Jacob Zuma sacked his finance minister Nhlanhla Nene in a move expected to worsen the country's economic troubles and the rand plummeting to new lows. Meanwhile, African leaders call for the revival of Lake Chad, which has been shrinking due to climate change, destroying the livelihoods of thousands who live in the region. Now let's start with some of the breaking news right now. But the Bank of England has decided to keep its interest rate in a vote of 8-1. Members of the policy setting committee kept interest rate at 0.5%, as well as the quantitative easing, what you call the stimulus asset buying program, will remain unchanged at 375 billion pounds. That's the breaking news as we speak. Early today as well, OPEC trimmed its outlook for non-member states oil production for 2016. Some of the conversations we'll have in the next 30 minutes. But let's get on to the melting metals. Glencore, the Swiss commodities trader, says it will seek to cut its net debt to as low as $18 billion by the end of 2016. That will accelerate a program aimed at reducing the company's liabilities as raw materials prices plunge. Glencore is seeking to reduce its net debt portfolio to between $18 and $19 billion by the end of 2016, compared with a previous target of the low $20 billion. Glencore's net debt totaled $30 billion at the end of June 2015. The company also said it would trim capital spending next year to $3.8 billion from an earlier estimate of $5 billion. The world's biggest miners, such as Anglo American Platinum and Glencore, are reeling from a slump in commodity prices that have cut profits and stretched balance sheet loaded with debt during a decade-long bull run. Okay, let's go on and talk about interest rate decisions. The Reserve Bank of New Zealand has cut its benchmark interest rate for the fourth time since June this year. The central bank cut rates from 2.75 to 2.5%, saying the country's economy had softened in 2015. New Zealand is the world's largest dairy exporter and has been hit by a fall in international prices. The move was widely expected by economists as the country continues to see lower inflation levels due to the strength of the New Zealand dollar. Despite the rate cut, New Zealand's dollar rose in mid-morning today against the US dollar. And of course, we just told you about the breaking news from the Bank of England, keeping its interest rate unchanged at 0.5% and holding its asset buying program, what you call the stimulus or quantitative easing, at 375 billion British pounds. Now let's put these stories together. Let's get across to DWTV financial correspondent for Channels TV, live at the Frankfurt Stock Exchange in Germany. A great day for the markets and a lot of other news around. Let's talk to Javier Aguedas. Javier, good afternoon and thanks for joining us. Let's start from what is making headlines right now. It's been a very busy day in Germany. We all know that with the Volkswagen and the Angela Merkel, the Chancellor, becoming the first female to be named the Time Person of the Year. But let's start with the UK, where the Bank of England kept interest rate unchanged and the asset buying program also unchanged. What's the reading to this breaking news as we speak?
Hi, Bosun. Yes, well, this was definitely in line with expectations. It is what investors had predicted and what experts were expecting to happen. So we did not see that much of a very positive reaction in the markets. The FTSE in London is still losing slightly, as are all major European stock markets right now. The thing is that the monetary policy of the Bank of England is old. We know that the interest rates have been that low for almost 6 years. Many say that the bond buying program is already exhausted. So an interest rate hike seems imminent, just like it is in the United States, but investors do not expect this to happen until at least the second half of 2016. And the Bank of England will have to proceed with enormous caution because meanwhile the economy is growing at a very good pace, which is satisfying, but the inflation rate is still not hitting the target. So you need all the indicators to be in place in order to shock the markets and shock the financial world with an interest rate hike, and that is something that will possibly happen next year.
Well, we're sure on this side of the planet that GW was at the press briefing today, early today, by Volkswagen CEO Müller about the diesel emission cheating scandal. Bring us up to speed on this briefing. How's the market and the German DAX reacting to that briefing as we speak?
Well, the market reaction was not that positive. At the beginning of the trading session and yesterday, Volkswagen was still up more than 3% in its stock price. Now it is still gaining, but a little bit less than 1.5%. So this shows us that the enthusiasm of investors was actually a little bit broken with this press conference. Why? Well, because we did not really get the answers that the investment world was looking for. They especially did not announce any specific measures on significant changes in the management. They did not announce how they are going to solve the problem of the diesel vehicles in the United States, which is going to be crucial to assess the scale of the financial impact that this will have for the company. And what we heard were things that were either already well known or logical. Things like there is going to be transparency throughout the process. Volkswagen is going to see which divisions knew about what and when, and that they are going to thoroughly investigate that. Well, they better do, because investors, of course, need that information in order to regain the trust in the company. So all in all, what we saw was a press conference that did not deliver what investors had expected, and that's why the reaction has not been as positive as it could have been.
Okay, give us about a minute or a minute and a half, considering the Time Person of the Year of Chancellor Angela Merkel. How is this piece of news being received by businesses, investments, and the markets in Germany today, being the first woman ever in history to be named Person of the Year by the Time magazine?
Well, you know, Germans are very critical people in general. They like to really reflect on things. So it's not like what you would expect in perhaps other countries where people would be ecstatic about this nomination. So, of course, there are mixed reactions. But all in all, what we can definitely say is that from a purely economic perspective and from the point of view of investors, well, investors really don't have anything to complain about during the time and the management of Angela Merkel, of the country's finances, because we know that Germany stood up very well to the financial crisis. We know that the economy has been developing quite solidly, and the stock market particularly, with record highs since Angela Merkel also took over. So all in all, it is a very good performance from an economic perspective. The management of other political issues is another separate topic where probably there will be more critical voices, but all in all, we do have to say that at least for now, the Greek crisis could also be avoided, or should we say postponed at least, but it has been giving a lot of calm to the markets and to the stock developments.
Okay. Thank you so much for your time today. Javier Aguirre, live to us from the Frankfurt Stock Exchange, financial correspondent for DWTV, the channel's television. We appreciate your time. Coming back after the break, the South African President Jacob Zuma late last night sacked the finance minister, Nhlanhla Nene. That's one story on one hand. We'll also talk about the World's Anti-Corruption Day. That was yesterday. Larry Akinola, our editor, former editor, DC South Africa, former associate editor, Financial Times in London, is sitting there via Skype to talk to us about the state of corruption in Africa and the road forward. Stick around. We'll be back in 1 minute.